Your shop invented the synthesis of equity analysis and economic analysis. A guy from Texas did this a few years ago. Synthesize right now the enduring Ed Hyman belief that America clears itself like nobody else. We will get through higher rates. We will get through all the tech layoffs and all the other drama that's out there. Synthesize the optimism on your floor right now.
Well, point blank, Ed has been of the view a good 9 months now that inflation is going to fall faster than the market believes. And thus far, it's starting to materialize. His full-year inflation forecast is 2.5%. The golden two handle, okay? That is an entire new set of circumstances for the Fed to deal with if, in fact, that's right. And you know, that is probably in and of itself the argument for risk assets that we think materializes at the end of the year.
At the end of the year, but not at the beginning of the year. And this is what I wanted to raise, because I actually understand what Max Kettner is getting at, and people who are saying, wait a second, the data isn't that bad. There has been a change in facts with better than expected weather, warmer than expected weather, and a China that's reopening. Why isn't that enough to sustain things for a bit longer before people hear what Raphael Bossack is saying? I am not a pivot guy.
Look, no question about it. The surprise to me when I got to the green room was to look at natural gas and realize it has a 3 handle on it after what we've seen the last several months. That's a big deal. But at the end of the day, we have this set of circumstances where the Fed is intent on reining in the labor situation. And the only way you do that at this point is to cause, I wouldn't call it a material slowdown, but look, Ed is looking for a couple of negative GDP quarters, what we used to call until the first half of last year, a recession.
Okay, and I understand the dig there, as a lot of people are saying. It didn't actually happen. So what causes the rip? What causes the upside if the Fed is determined to bring inflation down, if they're really going gangbusters there, and you don't necessarily get some sort of fiscal impulse or anything to really drive things in the other direction?
It's essentially this idea that there is a terminal, endpoint to the hiking. You don't necessarily need to see the easing, and the market is probably, and I think we're going to hear this in a few hours, incorrect in believing that there's going to be any sort of material easing in 2023. But what it really is what you have every time at market bottoms. There has never been a bear market bottom without a capitulation, without an emotional volatility spike, and that in and of itself clears the playing field for the next bull market, and we think that's going to happen.